Hi there, it's Peter Temple for actually it's today is Sunday, June the 5th, and this is the market report for Monday, June the 6th. Well, I'm going to start at the top of the world. Let's look at it that way with a big picture. Because I keep hearing people saying, well, this is going to do this and this is going to do that and all this crazy stuff. And I want to get back to the New York Stock Exchange, which is the big mother of exchanges because the S&P is part of this and the Dow is part of this. And the Dow is actually 30 stocks. But those are the ones that are always the ones that are traded the most and the ones that tend to be uh, up towards the top of the market. And you'll find things like the Russell 2000, the small caps, that tend to be lower. But when you look at the NYSE, you can see very clearly that you've got the top of the market here on May the 21st last year. And we had this first wave down. And this is very obviously a second wave here, if you know anything about Elliott wave. And so we're looking for a big third wave down. And the thing that people keep saying is, oh, gee, the S&P 500 is headed up through the sky and is going to get way up to, I don't know, 2,500 or something like that in the S&P. But you know, all the indices have to end up. I mean, if the S&P goes to a new high, everybody's going to have to go to a new high. That's just the way the market works. And this is nowhere near a new high. The other thing is that I caution you, you cannot look at an index in isolation. You have to look at all the indexes together and the futures and see what they're all doing, and that will tell you where the market's going. So we have a second wave here. My goodness, I've been saying this forever. And this is an ABC up, so it is a counter trend wave, a corrective wave, and we're going to head down on a third wave here. And that's the way things are looking to me. That's the way they've looked for a long time, and that's what I'm expecting. So let's take a quick look at the S&P 500. Now, this is the S&P 500. This is a 4-hour chart. The NYSE was a daily chart, so it's in a little bit tighter. But you can see the same pattern here. We've got a first wave down, and then we've got this great big second wave forming here, and it's a two-pronger. And I put the big 2 up here. I'm expecting this to top just in here around 2116, and it might be a little bit higher, but I'm not expecting it to get to a new high. And that's really the overall story on the S&P 500. And then I expect we're going to go into a very big, very large third wave down, which will actually be, if you are going by Elliott wave, it will be 1.6 times the length of this first wave. So you can measure that from the top of this wave, and you can see that it goes down, way down, eventually actually to around 1400. I think the first stop is around 1600 on the S&P. But I'm going to be putting these charts up within the next week or so you can get an idea for where we're going. I still think this is going to take us another good week and a bit, week and a half. I'm targeted on June the 15th, which is the Fed announcement with Janet Yellen as being the possible turn. So let's jump in a little bit tighter on the S&P 500. Before I go to the S&P 500, let's look at a chart I posted last weekend, which is of the ES. This is a 60-minute, 1-hour chart of ES, which is the S&P 500 futures. And I'd posted this chart last week showing the bottom of the fourth wave here, and then we had this large first wave up here, which was ended up being an ABC. It's a corrective wave because we were missing a second wave in here. There are some other reasons. For example, this little fifth wave here is all overlapping, so that's another problem. But it's obviously a corrective wave, and it did end up going a little bit further up here, which makes it even more a corrective wave. But I posted this showing the ending diagonal that I was expecting, and you know, that has not changed. I'm still looking for the same pattern unfolding, but it's taken us another few days to get to the top of 1. So I see it being a 2, 3, 4, 5, and this would be the ultimate top here. I'm not exactly sure where this one's going to end up on ES at the moment, but I'm going to show you this on the S&P 500 and how it is how it's unfolding. So the overlapping part of it is the fourth wave overlaps the second wave here, and so you've got this kind of accordion type thing and an ending diagonal, and you'd be able to draw a line this way between these 3 tops here and the 2 on the bottom, and it would be converging trend lines, and that's what you're looking for. So let's go look at the S&P 500. Here is a 10-minute chart of the S&P 500. So again, as on the ES chart, here's the bottom of this fourth wave, which was around 2022, and we have come up in this ABC, here a corrective wave to the top of what wave 1 would be, and I can't draw arrows on this one, so you'll have to use your imagination. But this is where we left off on Friday. We have a little second wave here. So we've had one down, two, it's actually a B wave. So you've had an A wave down, a B wave, and I'm expecting a C wave. Now, if you measure, which is kind of one of my favorite things to do, for the length of the A wave here, you will find that the C wave will end either at the 1.618 level or the 2.618 level. And that's what these two lines signify. So we're looking for this next wave down, which I would consider to be the second wave of the ending diagonal here. So you're looking at this ending diagonal. And this wave would come down to one of these 2 points. And this would give us the start of this ending diagonal. So the third wave would have to go up to a new high. And the fourth wave would come down part way. I don't have an ending point for this right now. And a fifth wave with a throw over would have to get to above 2116. And that would be the top of our second wave. So this is what I'm still seeing. We're still early in the process. Give it a few days, give it a week and a half, and it could time out to about that. Now I want to go look at the currencies to show you how they're matching. I've talked about the all the same market, and they're matching this move. And let's go look and see what they're all doing. We'll look at the dollar first, and then the euro, and then the Canadian dollar. Here's a daily chart of the US dollar, and we've had this great big wave up here, which was it's part of the first wave, but it's the third wave of the first wave. And we've had this counter trend move here, and we actually double bottomed here. So this wave has finished as the first wave, but we got this counter trend wave here, which is an ABC, should end up somewhere around this point here, which is 89. I've got it marked as 89.96. Could go a little lower, but this is the 38% retrace level for the dollar, and so that's why I'm suggesting it will get there. It may not quite make it. The euro's got the same sort of position, but right now what we're looking at is a little subset of this corrective wave, which you got an A, and on Friday we did this B very quickly, and we've got a C, which should end up at about 98, something like 98.30 or something like that before it starts back up again. So I'm expecting the dollar to go up for the next few days, and eventually has to get somewhere in this area to finish up its bigger C wave, and then we're going to see it head up longer term. People ask me, where's the dollar going longer term? Dollar's going up longer term. Euro is going down longer term, but we're in this corrective wave, which is just taking its time working through the process. But you're going to see when I show you the euro, because I think it's easier there to see how it also matches what's happening in the US indices. So that's the dollar for the moment. Let's go look at the euro. So here's the daily chart of the euro US dollar currency pair, and it goes in the opposite direction to the dollar. So we can see that it's been in this triangle. Again, it's in this counter trend move here, this corrective wave. This line represents the 38% retrace line, just as it did on the dollar chart. So it's a complete reverse. And being in this triangle, we've now got the A wave down. This B wave here has come down to the B point. We've got this long C wave, and the C wave of a triangle is always the most complicated wave, and this certainly is. And then we've got this D wave down, and all of these waves are always in three waves. You can see this one an A, B, C. This wave as well is an A, B, C, and so we've got the A. On Friday it did the B, and now we're going to turn. It's got a little bit further up to go. This didn't quite make 62%, so I'm expecting on Sunday we'll do that, and Sunday may start down in the ending, the C wave of this D wave down, and we will have one more wave up. So if you think of the US indices, which I showed you, we're going to see a wave, and this moves in the same direction. So we should see this C wave down at the same time the US indices do their second wave. And then we're going to see a big E wave up as we see the 3, 4, 5, because this goes in three waves. we're going to see an ABC up here to the top of the E wave as the U.S. indices do their third wave up and fourth and fifth. And that's the way that I see these two ending up in exactly the same spot and ending doing a big fifth wave in the euro down, and in the US indices a big third wave. And I see how the timing there works because these markets are all moving together. Now let's go look at and I'll flesh this out a little bit more in the post. I'll show you what the actual numbers here that you can expect us to move to, because this A wave, to make it down here to 108871, it means the C wave is actually going to be exactly the same length as the A wave, and that should finish off this triangle very nicely. So let's go look at the Canadian dollar. Now, just as we get into the US, this is the 2-hour chart of the US dollar, Canadian dollar. And just let me make a little note here that I go through these pretty quickly, but you can always stop the video. And if you go to my website, if you're on YouTube, because I also post these on YouTube, you'll find that I'm going to flesh out some of these a little bit more in the post itself. I'll have the charts there, and you can get a little bit more of an idea of what's going on if this seems to be a little fast for you. But on the US dollar, Canadian dollar, we had this low here, which was the end of this corrective wave down, which is actually a fourth wave. And then we've got this A, B, C. And again, if you measure this and you look at the A wave as being 1 unit, if you measure this, you'll find that the extension of that to 1.618 should be the end of the C wave. And so that's why I have this number here, 1.335 actually at the moment. And that should end up being the end of this C wave. So we've actually had a triangle here, which I thought would hold, and it didn't. It actually failed. The triangle ended up going through the triangle and up to the top here, and failed and came back down when the euro and US dollar on Friday with the labor report did their big B wave. So we've actually got a double-pronged second wave here, which is great. It means that as we double bottom on this one, we're going to see this reverse and do its final C wave. It's been very frustrating because this has been going up and down and all over the place, but it still has to get to its objective. And then once it reaches the 1.33, I see it reversing, and it's going to head all the way back down here. The same thing actually, it goes in the opposite direction to the euro, and if you were to kind of figure this out, you would see that we've got a wave down in the euro to finish that D wave, and that's what we're going to see up here as this goes in the opposite direction, because it's a reverse because of the US dollar CAD. This is kind of a flip chart from the euro. And then we're going to see a very large wave up here as I see the euro doing its E wave and the US indices finishing up the 3, 4, 5 of the ending diagonal. So that's what I'm expecting. This has got a long way to go, but it should start moving fairly quickly now. If it doesn't, then I'm wrong, and it'll be very obvious. So that's the market report for June the 5th. And you'll see more information in my blog, and I'll post the charts there too and give you a little bit more, a tighter look at what's going on here with those. Great trading. We're looking for a top very soon. I'm looking ahead to June the 15th, and we'll see what happens.